This is a demonstration of exercise E216 and E217, and the problem states the following transactions occurred for Lawson Engineering, and it gives us several transactions that occurred in the month of July. E216 asks that we journalize these transactions of Lawson Engineering and include an explanation with each journal entry, and it gives us several accounts to use for our debits and credits. So we're going to start out with the transaction that occurred on July the 2nd. The problem states that we received $14,000 in contributions from Brett Lawson in exchange for common stock. So he gave us cash of $14,000 and we gave him common stock of $14,000. And our explanation would be issued common stock in exchange for cash. On July 4th, it says that we paid utilities expense of $370, and our problem states that we have a utilities expense account. So expenses are debited, so we're going to debit utility expense for $370, and we're going to credit cash for $370 because it said we paid that. And our explanation is going to be paid utility expense. On July 5th, it says that we purchased equipment on account. So that means we got equipment, which is an asset. So we'll debit equipment for $1,600. And we got this equipment on credit. So that means we're going to have an accounts payable that we'll have to pay in the future of $1,600. Our explanation would be purchased equipment on account. On the 10th, it says that we performed services for a client on account. So that means we did not get paid for the services that we performed, but the customer will owe us in the future. So we're going to set up an accounts receivable for the $2,900 with a debit, and we're going to credit service revenue for the same amount. And we're going to have our explanation. We'll just say performed services for client on account. On the 12th, it says that we borrowed $7,100 signing a note payable. So we got cash of $7,100, and we're going to credit our liability since we have to pay back that $7,100 in the future for $7,100. And our explanation is going to be borrowed cash by signing note. Okay, and on the 19th it says that we paid cash dividends of $200 to the stockholders. So we're going to debit dividends for $200 and credit cash for $200. The explanation would just be paid cash dividends. On the 21st, it says that we purchased office supplies for $840 and we paid cash. So we got an asset, office supplies. We'll debit that for $840 and credit cash for $840. And our explanation would just be purchased office supplies with or for cash. On the 27th, it says that we paid the liability from July 5th. So we see on July 5th, that was when we bought the equipment for $1,600. So we paid that off. So we're going to debit accounts payable for $1,600 and we're going to credit cash for $1,600. And our explanation would be paid cash on account. Okay, so we've journalized all of the transactions for July, and now we're ready to go to exercise 217, which asks us to open T accounts for Lawson Engineering, and it lists all of these accounts and posts the journal entries to the T accounts, and then compute a balance for each account. So to make this a little bit easier, I'm going to delete these instructions and move our T accounts up so that we can see them better. Okay, and I've set up the T accounts already, and I also put the dates in there because that's going to save us some time as we go through and post these. And we're just trying to learn the process so that we can do this a little bit faster. So our first transaction on July 7th, we debited cash, so we're going to post that to the left-hand side of the cash account, and we credited common stock. So we're going to put the $14,000 on the credit side for common stock. On July 4th, we had utilities expense of $370, so we're going to put the $370, post it to the debit side, and we're going to post the $370 to the cash side. And for equipment, we increased our equipment account $1,600, and we got that purchase on account, so we're going to increase our accounts payable. We had a services that we rendered on account, so we have a debit to accounts receivable for $2,900, and we're going to have a credit to service revenue for the same amount, $2,900. And then we also paid or got cash of $7,100 by signing the note. So we're going to debit our cash account, and we're going to credit our notes payable account. And then it says we paid dividends of $200, so we're going to debit our dividends account for $200, and we're going to credit our cash account for $200. And then our next one is we purchased office supplies for cash, so that $840 would be a debit to office supplies and a credit to cash. And then our last transaction said that we paid the accounts payable off for July 5th, so that's going to involve a debit to accounts payable and a credit to cash. And as I've been updating the cash account, I've also gotten the balance, because I set up my spreadsheet to add the debit side and subtract the credit side. So I've already got my balance there, and I had each one of my other accounts also total up the balance side. And if you notice, all of our assets have a normal debit balance. Our accounts payable has a zero balance. We don't owe anybody. Our note payable, which is a liability, has a credit balance, as well as common stock. Dividends will always have a debit balance, and service revenue has a credit balance, and utilities expense a debit balance. And that is the conclusion of the demonstration for exercises 216 and 217.